Amazon laying off another 9,000 workers as job cuts in the tech sector expand at a time of growing economic uncertainty. It follows cuts last fall and early this year. Amazon, which aggressively increased workers during COVID, a period of growth for the company, as well as a lot of other tech companies like Zoom, discovered that it had to reduce costs. It had previously disclosed 18,000 layoffs. TikTok said that's the short video sharing app, now has 150 million monthly active users in the United States, up from 100 million it said it had in 2020. The Chinese-owned app confirmed the figure ahead of the CEO Xu Zichu's testimony set for tomorrow, Thursday, before the House Energy and Commerce Committee in the United States. On Friday, 6 more U.S. senators backed bipartisan legislation to give President Joe Biden new powers to ban TikTok on national security grounds. In response to the popular chatbot ChatGPT, Google is making the conversational computer software Bard available to the general public, but it is delaying its integration into its main search engine. Google announced Tuesday that it would open up access to Bard to an increasing number of users in the US and the UK after years of development. With the initiative, Google and Microsoft Corporation are now more competitive than ever to create cutting-edge artificial intelligence systems that can produce text responses that are human-like. For more of these headlines, we cross over to London, where we're joined by Arise business analyst Bode Ososanmi. Good afternoon, Bode. Thank you so much for joining us. So, global crisis, banking sector, it looks like it's easing. Who are the winners and the losers here, Bode?
Yes, I think nerves are settling relative. Indeed, I would say there's an easing. If you look at the rally and what a rally it is, FRC, that's First Republic Bank, is up 37%. You just said they were down 47, but they're up 37.52, although they've been down over 80%, First Republic Bank, since this crisis started. But they're up 37.52%. PacWest is up 13.62%. Western Alliance is up 15.85%. So clearly, there is an improvement in the broad situation. Even the banks, the bigger banks, milking this rally. I can see Citibank is up 4.06%, or JP Morgan is up 3.42%. Everything is green. S&P 500, Dow 13, Nasdaq, they're all green. And if you look at European stocks as well, FTSE is up 1.7, DAX is up 1.86, Caron up 1.55. Hang Seng 1.39. But to your question, I think the market and regulators don't still like the uncertainty. And there's still a lot of it, especially in terms of what is going to happen with the central bank, the main banks, the Apex Bank decision. So I would say they could be a potential loser. You remember Sunday, March 2008, according to those who've digged into the history, the U.S. government and banks were said to have raced to finalize a rescue of Bear Stearns and they were pushed to the brink of collapse by what looked like Iran. Of course, you know what happened in 2008 after that. So many are trying to say that we've seen this before and it's not good. Though U.S. banks, I think, are in a much better financial condition, low levels of problem loans, unlike in 2008. But the announcement of UBS buying CS, credits, Suisse, and all the guarantees is easing the contagion fears and all the counterparty concerns. Another potential loser, I think, is the regulator. They are at a loss on how to respond to this. What changes need to be made to capital rules, investment rules, especially for the smaller bank. And the monetary environment has also tightened, which complicates the dot plot decision for the Reserve Bank tomorrow. Of course, the big loser, I think, would be the regional banks. Loss of confidence, although that is gradually coming back. And it's also likely the smaller banks that survive will most likely face tougher regulations with stricter balance sheet ratios. But just like you mentioned, holders of this 81 additional Tier 1 bonds, about $17 billion worth of them, they are higher risk bonds. They offer a higher yield than most of the other bonds by borrowers, but they're very popular with institutional investors. Apparently, the Swiss regulator wrote down their value to zero on the orders of on the Swiss the Swiss authorities. I'm not quite sure why they had to do that, but we could get a lawsuit on that. Credit Suisse 81 bondholders and are certainly not very happy with how this has happened. Normally, you will prioritize bondholders ahead of shareholders, and shareholders are going to get $3.23 billion. So that doesn't quite work. But in terms of potential winners, UBS, I think, may emerge as a rare winner. We suspect they got a bargain for Credit Suisse. Moody's doesn't agree. They yesterday downgraded the outlook for UBS based on this deal that they're not too happy with. Another potential winner is JP Morgan, the big beneficiary of the current environment. Their shares are doing well. Depositors are coming back to them. And they have a fortress balance sheet which just appeals to everyone around this time. Recruiters are also doing well. They're finding all kinds of skills coming out of Credit Suisse, looking for how to place them. Of course, we know gold is a safe haven, always doing well. It climbed over $2,000 an ounce for the first time since March last year, as we saw people going to safety. So there are winners and there are losers, but I think the good news is that the jitters are settling.
And in recent months, Amazon, would have fired about 27,000 staff. Well, what are your thoughts on that? Is it going too far?
Well, I'm looking at how their stocks reacted to that. It's still up 1.47%. Of course, the unions are not very happy. They think it's a bit aggressive, but we know why they're doing that. They believe they have over-recruited. But if you look at the totals that they've done in the last few months or so, we're talking of almost 30,000 people. That is a lot, although they have 300,000. Amazon will, of course, argue that they are not doing well. And if you look at the latest numbers from Amazon, they were not good at all. 300 million net income decreased by some $300 million in Q4. They reported a net loss of $2.7 billion in 2022. So I think they're trying to do two things. One, adjust for the mistakes they made, and of course, try and see whether they need to cut their code down to their size, given that they are not going to be making as much money as they're used to. But the other thing I think we should remember is that as we get into a more digital age post-COVID, the efficiencies of these companies in terms of what they can get out of staff is much, much higher. And they're using higher skilled people, and there are all kinds of opportunities to reduce staff. And I think they want to take advantage of this in an environment that perhaps is more used to it. But the labor and activist groups are being quite aggressive and say this is greed, that Amazon is not broke. Why do they need to go this far?
And Jerome Powell, Fed Chair, and other Monetary Policy Committee members meeting today. How do you think things are going to go?
Well, markets, I just checked a minute ago, they seem to be very united that the Fed will raise the policy rate by 25 basis points to 4.75 to 5%. But uncertainties are still there. The Fed, they don't like being bullied by events. If you watch how they behave, and even if they're going to change anything, it will be the dot plot. Also, they don't want to admit that there is a huge crisis that they can't handle. And my suspicion is that Powell will say that he's able to deal with the crisis. The interventions are adequate. They still have more tools that they can use to manage this, but they have to keep their eye on the ball, on inflation, and so on. So it's very rare to get surprises from him. So I think 25 basis points is what we are going to see, except, of course, we still get some unusual events in the banking sector, which I don't think has run short of surprises for us.
All right, we'll see how things turn out. Arise business analyst Bode Ososanmi, buddy, thanks for taking us through the headlines. Appreciate your insights as always.